In my experience, Michelle, uh, at some point in time in a precious metals bull market, when the generalist comes into the market, I think we're just seeing that now, silver begins to outpace gold. Please don't ask me why, because I don't know. I just don't. I just know that. Perhaps it's the lower unit price. But in the three precious metals bull markets that I've lived through, at some point in time, silver decouples from gold. Perhaps we've seen that in the last 4 weeks. And when that happens, for a time at least, the gold price seems to, pardon me, the silver price seems to move twice as fast as the gold price. I need to say that that's not how I invest or speculate anymore. I own physical precious metals to maintain my purchasing power rather than to speculate or to make money. But there's a whole different class of investors than I who could be expected to be attracted to the volatility and favor silver over gold. And if past is prologue, one would expect from the period that breakout occurs for silver to outpace gold roughly 2 to 1.
Beneath the surface of international markets, there may be a historic conflict between actual riches and financial illusion. With record highs, gold continues to make headlines, but seasoned investor Rick Rule believes that silver is the true story. It is the most dangerously distorted market on earth, according to him. Nearly 200 paper ounces of silver, exchanged back and forth by speculators who never plan to accept delivery, are hidden behind each genuine ounce of silver. This indicates that the great majority of silver that is purchased and sold is not real. Rick cautions that this imbalance cannot last indefinitely. The system may collapse and cause what he refers to as a silver supply shock if investors begin to demand tangible delivery and lose faith in paper promises. The pressure is rapidly increasing due to tightening physical inventories, rising industrial demand, and aggressive stockpiling by countries like India. Don't forget to like, subscribe, and ring the bell for the latest analysis on gold and silver markets.
These are promises, to your point, of representations of silver, not the metal itself. But when we say that the silver market is distorted by paper silver, what does that mean? Break that down to us. How big is that distortion?
Let's not worry for a second about the exchange traded derivatives, the ETFs, the Sprott physical products, because I think those are accounted for in the silver market. The claims that have always bothered me are the claims in the futures market. It is not uncommon for the daily volume of futures obligations in the silver market, the daily volume, to exceed by a factor of 200 times, not 200%, but rather 200 times the amount of physical silver available for good delivery. This is an extremely, extremely leveraged market. Now, virtually all of those claims, until very recently, cash settled, which is to say they weren't held for maturity. They were rolled over, whatever happened. Very recently, because of location disparities, which is to say the London market not having enough gold, there was a location premium for gold in London. And what that meant was futures holders in the US would actually take delivery of the physical silver and ship it to London to take advantage of as much as a 4% disparity in the London quote and the Chicago quote that was contemporaneous. A 1 day 4% premium. When that happened, the gold lease rates in the United States skyrocketed because rather than leasing gold, it was easy to make 2 or 3 or 4% simply shipping that gold to London. What has always scared me was an imbalance between supply and demand, between the physical gold and that paper gold, if more people stood for delivery. Make no mistake, Michelle, if you have a real imbalance in the futures market, you are not going to engineer the massive short squeeze that the silver people hope for. What the exchange will do is that they will halt silver trading. They will set an arbitrary price between buyers and sellers, and they will cash settle. That's what will happen. The exchanges run for the exchange members' benefit. That notwithstanding, that sort of market turmoil, what is likely to be the agreed upon cash settlement price, were that shortage to occur, I think would likely be dramatically higher in the circumstance that we see today than the price is today. And the dislocation in a market where 200 times the claims, where there are 200 times the claims relative to the amount available to settle on a daily basis, is a market that's market that's really, really, really ripe for disruption.
When you say 200 times, you're saying is that like a 200 to 1 ratio?
Yes. Now, that doesn't happen every day, but there are days when if you look at the physical silver available in North American futures markets on the COMEX as an example, good delivery silver in system available for the settlement of the claims, it is not unheard of to have 200 times that amount of silver traded in contracts on a daily basis. Now, the huge majority of those things cash settle. They aren't
Mhm.
presented for delivery. But in a situation where you have these goofy location swaps, 4% difference in spot price between London and Chicago, it's very tempting to take delivery, ship it, and grab the money. So all of a sudden, you had a situation where the held for delivery proportion of those trades relative to the cash settlement portion of those trades went up, and the COMEX got stressed. I'm sure that your channel's employer, has also seen a remarkable shortage of small denomination physical silver products, the 1 ounce products, the 10-ounce products. We've noticed at Sprott that there is no shortage of silver available to us in good delivery in wholesale quantities. In other words, the bullion banks have been able to supply Sprott with the physical silver that they need. But the dealers have had a very difficult time keeping retail denominations in stock. They've also had a very difficult time hedging their silver inventories and leasing silver inventories to make available inventory to their clients on a short-term basis. There's been a dramatic turmoil in the silver market. Your own sponsor being one of the few that seems to have been able to stick handle their way through this crisis in good order and service their clients.
How does this ratio of 200 to 1 in the precious metals market, and I guess silver in particular, how does that compare to other assets?
I've never understood it, first of all. The idea that the price of a substance should be dependent on its relative abundance or scarcity in the Earth's surface doesn't make any sense to me. It's a good way to generate commissions or sell newsletters, but that ratio doesn't go to utility. It doesn't go to production cost. It doesn't go to stock versus float. The idea that silver should be, or that gold should be 16 times more valuable than silver because silver is 16 times more abundant in the Earth's surface doesn't explain much to me. People pay a lot of attention to it, and I think it's actually become a factoid. I think that when people quote that number, they actually impact the market's perception and the market's action. I'm just not sure why the statistic is valuable.
Rick Rule has been an expert in the commodity markets for decades, and his message today is very clear. The price of silver is determined by leverage rather than supply and demand. Instead of actual metal, the entire system is based on paper promises. The amount of silver traded through futures on COMEX and the London bullion market can surpass the amount of deliverable silver by as much as 200 times each trading day. According to Rule, this mechanism only functions when no one requests delivery. However, traders rush to take advantage of the differential by purchasing real metal when physical premiums emerge, such as when silver prices in London are 4% higher than in Chicago. When silver surged beyond $50 an ounce in 2025, we witnessed the emergence of these fissures. Lease rates skyrocketed, inventories fell, and international mints were unable to meet demand. Due to a shortage of silver, certain European and Indian ETFs even stopped issuing new shares. While silver's smaller market made it far more volatile, gold surged beyond $4,000, indicating a retreat from fiat currencies. Make sure to like, subscribe, and click the bell icon to get notified whenever we upload new content. We really appreciate your support.
But in direct answer to the question, I don't know of any other commodity in the planet that had the mismatch between the claims volume, which is to say the futures volume, and the amount available for good delivery.
So, Rick, it begs the question, can we have an honest silver market? Is the silver market then always subject to manipulation if it's not a true market structure? And if it is always subject to manipulation, why invest in it in the first place?
Well, the manipulators can only go so long. It is alleged that in my youth, I constructed several short squeezes. Those are short-term phenomenon. I'm not somebody who believes that there's been a 30 or 40-year thoroughgoing conspiracy to depress the price of silver. You didn't have to do it because most of the time the price of silver was going down. Why would you strive mightily to do something that was going to happen via gravity? But I know that all markets in the near term are manipulated. The LIBOR market has been manipulated. The U.S. Treasury market has been manipulated. Those are much larger markets than the silver market. And in a market where the futures volume is so large relative to the amount available for good delivery, near-term market manipulation, albeit expensive, is really ludicrously easy. If you were going to do it on the short side, you construct a short ladder in the futures market, 3 months, 6 months, 12 months, 18 months, something like that. You develop a good size short position. For fun, we'll call it $1 billion. You borrow a bunch of physical silver and you sell that physical silver as aggressively as you can during the most illiquid part of the trading day, attempting, as an example, to drive down the silver price 3%, 4%, 5%, and have that precipitous decline in the physical market impact the quotes in the futures market. Cover your shorts on lock limit down days, pay back the silver that you owned, and walk away with a profit. I remember in the decade of the 70s where there was allegations that exactly that same type of manipulation happened on the long side. Manipulators generally do what's easiest. If there's a negative bias, they try to manipulate on the downside. If there's a positive bias, they try to manipulate on the upside. But the idea that silver markets aren't in the near term manipulated is extremely naive. The reason why one would invest in silver is because you don't care much about the noise, the trading noise in the near term. If you believe, as an example, like Rick Rule, that the nominal price of gold has a threefold upside, what happens next Friday is of very little consequence to your belief. To me, the intraday, frankly, the inter-month price moves are irrelevant. I'm thinking in 4-year terms, 5-year times, and I'm thinking in terms of quantum moves.
Mm-hmm.
The difference for me between $40 and $42 is absolutely inconsequential. It just absolutely doesn't matter. And I would argue that most speculators who think that they can outguess the bullion banks or the big financial syndicates, short syndicates, are delusional.
So then give us your long-term silver outlook, the price that you're focused on and not those smaller moves.
In my experience, Michelle, at some point in time in a precious metals bull market, when the generalist comes into the market, I think we're just seeing that now, silver begins to outpace gold. Please don't ask me why, because I don't know. I just know that. Perhaps it's the lower unit price. But in the 3 precious metals bull markets that I've lived through, at some point in time, silver decouples from gold. Perhaps we've seen that in the last 4 weeks. And when that happens, for a time at least, the silver price seems to move twice as fast as the gold price. I need to say that that's not how I invest or speculate anymore. I own physical precious metals to maintain my purchasing power rather than to speculate or to make money. But there's a whole different class of investors than I who could be expected to be attracted to the volatility and favor silver over gold. And if past is prologue, one would expect from the period that breakout occurs for silver to outpace gold roughly 2-to-1.
Rick Rule clarified that although short-term manipulation of the silver market is possible, it is not the outcome of a long-term conspiracy. He notes that short-term manipulation occurs in all major markets. He claims that because the futures market is so large in relation to the quantity of real silver that is accessible, silver is particularly vulnerable. Because of this, short-term pricing manipulation is comparatively simple and inexpensive. Rule stresses that these short-term games shouldn't divert long-term investors. True investors, he claims, concentrate on multi-year trends rather than daily noise. If you think gold and silver are about to enter a multi-year bull market, it doesn't matter what occurs next Friday, as he puts it. For him, the true move may be from $40 to $200 over time. Thus, the difference between $40 and $42 of silver is immaterial. Additionally, he warns that the majority of speculators who believe they can outwit big bullion banks or hedge funds are mistaken. The true opportunity is found in perseverance and conviction rather than in attempting to predict every change in price. According to Rule, silver finally separates from gold and starts to soar about twice as quickly in every significant precious metals bull market he has witnessed. This usually occurs when a large number of investors, not just experts in precious metals, enter the market. He acknowledges that he doesn't fully understand why this trend keeps happening, but it probably has to do with silver's higher volatility and lower unit price, which draw retail purchasers and momentum traders. If you enjoyed this video, don't forget to hit the like button, subscribe to our channel, and turn on notifications so you're always up to date. Thanks for watching.